let's take a look at something very interesting that happened or that's going on, and it is a government shakedown. This is just an old school gangster move where the neighborhood boss is squeezing and he's shaking down one of the local businesses. That's pretty much all this is. I doubt that Coinbase is going to fall off the face of the earth and disappear. However, they do have to pay some fines and they will sort it out. But what results from this is a potential opportunity. So let me show you what I had set up previous to today's excitement. I had an iron condor and I rolled the calls this morning and I rolled them down. But anyway, the current setup I have here is, let me show you my positions tab, and we will see that in coin for 6 days I've had the 45.35 on the put side, and then this morning I rolled down the call side to 60.70 from 75.85. And if we go over to the analysis tab, this is what it looks like. And that's my iron condor that expires in July, so it's what, 45-ish days away? 45 days away. All right, in addition to that, I added a put, which I sold, same expiration as the IC, the Iron Condor, expires July 21st this year, 45 days away. The strike is 30, and I sold that for $1.28. That was this morning. You see here 0 days. Now, in addition to that, I was thinking, what else can I put on that would be somewhat interesting and nothing that I have to concern myself with as far as spending too much time looking at it. So here, let me show you what I did. I went out 318 days away to April the 19th of 2024. And I did a couple things here. What I did was I bought call vertical. This is a bullish move. So I bought the 80 call, and that cost $8.79. Let me zoom in a little bit. You can see here that the 80 call, which expires in 318 days, costs $8.79. And I sold the 100 call for $5.93. All right, so this is going to be $2.86. So this cost $2.86, but I didn't pay for that. What I did was I sold, same expiry, 318 days away. I sold a 30 put for $6.66. So I basically got $3.80. Yeah, $3.80 to put on this trade. And the way this looks on an analysis tab, well, let's take a look at the analysis tab. And wait, I got to make an adjustment here. So let me clear all of them. And what I want to show is the trade I just mentioned. So quick recap, I sold the 30 put, and then I bought a call. This financed and left me with a credit, and a call credit spread of 8,100 of the strikes, and those are calls. So now let's shrink this a bit. And okay, so here's what this trade looks like. I have a very, very wide profit tent, and the max I can make on this trade is the difference between the calls, which is 20. 100 minus 80 is 20, plus, and that would be $2,000. 20 times 100 shares, $2,000, plus the credit I received for selling this put at 30, which was 380, so 666, so that's another 380. So the total potential profit on this trade would be $2,380. But with this type of trade, what I like to do is I get to a point where this put expires, well, not expires, but will get down to a price which basically pays for the cost of this call spread. So let's say that in this case, this call spread costs 280 and I sold the put for 666. All right. So if this gets down to, let's say, 386 roughly, this cost me 280. Yeah. So 386, I can cover the put, and that means that this call spread is paid for. So I could cover this, and I would leave the call vertical on, and I'm basically free rolling on it. So I could just completely ignore it and let it play out. Now, the nice thing about this trade setup is that I have a bullish position that's financed by selling this put. And as you can see, I have a pretty wide profit tent. If coin continues to go down, and let's say it was below $30 next year, well, then I could own 100 shares of coin if I want at a price of 30 minus the credit I received of 380. So I basically own coin at a price of $27.20, and then I can deploy a wheel strategy and start making money that way. So this trade I like, but not only do I have this helping, I actually have this put that expires in 45 days as a potential way to defray the cost of this trade. Now, this morning, before I put on the trade I just mentioned, and before I sold this $30 put, coin was somewhere, my iron condor was somewhere $100 something loser, but it looks like coin has rallied a bit since this morning's open. Let's see what the low of the day is, or was. The low is currently 46.45. So we've rallied basically $4.70 from the low, which is a nice little bounce actually. So let's see, $4. So this was down almost $11, basically $11 earlier today, and it's rallied a bit. So at this point, my position in coin is actually up a little bit on the day. As I mentioned earlier in the day, this was a $100 something loser from the iron condor that I've had on for, let's see, basically 6 days. I've had the iron condor on, and then I added the other stuff today. So I put that on because I just see this as an opportunity to profit from the chaos that was created via the shakedown by, I believe it's the SEC in coin. Now, will coin rally from here? I have no idea. Will coin drop from here? I have no idea. I'm not into predicting where prices are going to go. I just try to make bets based on where I think let me use a simplification here. I'll make a bet if it looks like the pot odds are lining up favorably. And remember, you can have good pot odds, but you're still going to lose the bet most of the time. For example, let's say you're getting 3-1. All right, that means you need to be good 25% of the time. But however, if for some reason you're going to be good 30% of the time rather than 25% of the time, you're making an excellent bet. But notice that most of the time that bet's going to lose. So you can still make excellent bets even though the bet is going to lose more often than it wins. So the odds, what I'm basically saying is that the odds matter. And if you think you have an opportunity available, you should take advantage of it. I know people are going to say, hey, it's probably not a good idea to try to catch falling knives. And I don't know how much lower coin is going to go. And quite honestly, no one does. So buyer beware, and seller of options beware. Just think of it as a potential opportunity, and some opportunities are better than others. Okay, thank you for watching. I will catch you guys next time.